What would the data structures be that undergird the financial social banking platform of the future? If you think about what undergirds, for example, the search engine, the basic data structure at the bottom of it is a web page, is a URL. At the bottom of most social media sites, it's a post. At the bottom of a retailer, it's a product. Well, then what would be the data structures that would undergird a financial system? Financial system is composed of balances and transactions. And the transactions periodically update balances, and then someone engages in new transactions based upon those balances and assessing their position. We expect our banking data to be very controlled, very secure. And that's going to be critical for a true social banking platform. Comply with all government regulations. The concept of a credit rating score would be something that would be visible in a social banking platform. We have these in social environments today. Stars tell us about the credibility of vendors involved or of customers that use those vendors. And there would be additional kinds of credit scores available. You'd be able to choose from the kind of algorithm that would come in and access your data. You get to choose whether that data is visible to a particular algorithm. If you want to join particular social groups, you would agree to submit your data, have your data accessible to particular algorithms. I might want to share my data. There might be ways that I'd like to share my data with my accountant for tax purposes. Try to ship them off on a CD or a thumb drive or something of that sort. What if I were able to simply invite my accountant and specify which kinds of records and what sort of data I'd like to share with them? What about for an insurance agent that I want to connect with, or an investment advisor? All of those might be ways that I might want to share my data. You know, the whole crowdsourcing environment is creating social connections in a commercial way. And if I was able to share this data with the companies that I'm interacting with, more blockchain's idea of being able to have that data entered once and shared multiple times, that would also have a very powerful effect upon increasing the accuracy of the data and not having the duplicated data. Continue on the theme of the social banking platform, or perhaps we should call it the social commerce platform. Those two industries have grown up very independently, but at the bottom of the data processing, they have much more in common than most people have ever thought about. Every business process in an ERP world is undergirded by a posting process. In the payments area, to either the accounts payable master or the accounts receivable master. Material manufacturing area, the material master file, receipt of raw materials and the issuing of raw materials out to the production floor. This posting process undergirds so much of what goes on in the world. The kinds of things that are stored here may be more than just financial transactions. They could be any kind of business event we wanted to measure in any way. And then we can accumulate those business events, take action upon those business events, post new business events to the master files, and the process continues. So you begin in a social banking platform, you're presented with your balance sheet, what the outstanding set of accumulated balances are for your balance sheet. Then, after you look at those and analyze them, you want to understand a particular balance. Dive into more detail about the balance to understand why that balance is what it is. And you might want to decide that based upon a balance that you want to take another set of transactions. Do I have too much cash? I have too little cash? My savings is high enough, my savings is not high enough. I have some outstanding bills. All of those kinds of things are the kinds of transactions you might take. You start with the balance and then you engage in transactions. After you've engaged in transactions, you then want to see what the updated balances are based upon those transactions. So you go then next to say, I want to apply those transactions. I want to see my balances as of a new point in time. You might want to set some limits to say, hey, I don't want these balances to go over this particular set of numbers. That could be like a budget. A blockchain, distributed ledger, hyperledger, solves one kind of reconciliation problem, that problem of settlement. But there's There's a lot more than just financial reconciliation that goes on in the world where we record many different kinds of transactions in two different places. For example, Company 1 and Company 2 have a vendor-customer relationship. And the customer says, I need some raw materials. So they cut a purchase order. Right there, we've taken and duplicated the data, create a bill of lading, and they send that over with the goods. And the bill being sent across, and the bill is then goes from one party to the other. The other party submits a check to their bank. That bank submits that check to the other bank. The other bank tells the last company that the payment has been received. It's only this last transaction that we actually have a financial transaction. Those could be affected by a blockchain sort of technology as well. It could help eliminate that kind of reconciliation in a very substantial way. This could be a radical new way of reducing the overhead for business transaction entry and reconciliation of those processes. Reconciliation. Blockchain doesn't really deal with much of the analytical needs in our world. Our analytical needs are to turn transactions into balances, simply to understand what's happened over time. We take and copy many business events into many different data supply chains, as I call them. And those data supply chains, if they tend to diverge from each other, they tend to raise questions about the accuracy of what the business events are represented in those balances. Blockchain doesn't do anything really when it comes to posting processes, social banking, social commerce platform. To start with understanding your position, your balances, you want to be able to move through those over time, see what your position was at different times, in different ways. If we have to create those positions, create those balances, that's going to require a posting process. We want to be able to accumulate our balance sheet based upon many different companies, based upon many different kinds of transactions. The disparity of the data structures used in so many of the ledgers today increases and drives up this curve of the data integration cost. The cost of computing over time has been declining, and yet the data integration cost continues to rise because we have more and more data. In the early days, when computing was very expensive, we had little data. We organized that data to get rid of details quickly to keep the computing costs low. But as data grows, our data integration cost is now at a point where it may exceed the compute cost available to us, necessary to produce our outputs and reports. Processes. Balances are the beginning of analysis on business events. It's much more than simply aggregating business events. There's new business events that will need to be created through that process. Interest is something that happens on the passage of time. It's a temporal business event. It happens against a balance. And so the process of accumulating transactions also needs to include the process of generating new transactions for the passage of time. If you have things in multi-currencies, you have to do some sort of translation process, because a metric engine can read the inbound transactions, the new transactions that some customer, some user has said should occur, accumulate those into a balance and post it to yesterday's balance to create a new balance, and also create new sets of transactions against those new business events and apply those as well. Plus aggregating the many different views that are needed off of the low-level detailed balances that are required. If I could do it for my own set of balances, accumulate the set of balances for a department, or for a small company, or for a set of customers, or for a branch, or for an office of some kind, the volume of data grows, the volume of balances that have to be accumulated grows, but the basic underlying data does not change. How can all of these different kinds of business events ever be accumulated into a single set of posted balances? Why is that possible? The possibility comes because we have to maintain a key identifier, a customer contract, a process, an employee, all of those kinds of key business identifiers. Primary posting key is the same for every business event. It's the same set of attributes, not the same values, but the same set of attributes. And then all of the disparity, all of the uniqueness for each one of these business events is held in a separate record that we join together. So this process of keeping this key identifier, plus the addition of a metric engine, plus the addition of being able to store once and use many different times, accumulating a posting process, being able to generate new business events off of those posted details. All of that combining to be able to accumulate and gather together financial and other business metric data from many different disciplines, including risk and customer profitability, all kinds of different kinds of metrics that we want to accumulate. All of that would make for a very robust business measurement system, which is effectively what our ERP systems do today and what our banking systems do today, and what the coming social banking platform might be of the coming day.